What's happening, traders and investors? AK from Fallible here. Now, we all know the biggest profits come from staying ahead of the market. If everybody thinks prices will go one way, you gotta look for evidence that says otherwise. And on the rare occasions you actually find that evidence, you can make truckloads of money. Today I'm gonna show you data that proves the market is completely wrong about one particular asset. And I'm talking really wrong. Like when Steve Harvey announced his pageant winners. The price of this asset collapsed in 2014 and took everyone by surprise. And now most investors think it's set to stay low for years to come. But in reality, this gooey dark goodness is set to take off on a massive run higher. No, we're not talking about Nutella, we're talking about oil. The market thinks oil prices will stay low for two reasons. First, because fracking technology keeps improving, adding more and more oil to the world's supply. And second, because electric cars are taking over, killing global demand for oil. But just like this poor beach chair doesn't really support Chris Christie, the data doesn't really support either of these 2 points. And once the market finally realizes it, we could see oil shoot up to $80 or even $100 a barrel. Let's start with fracking technology. It is true that it's improving. It keeps getting easier to pull more oil out of the same wells, increasing well productivity. But recent MIT research shows that forecasters gave fracking too much credit for past increases in oil production. These forecasters fracked up. They didn't realize that drillers were abandoning their average wells to focus on their best ones. Doing so gave them more oil in total, but that oil didn't come from well productivity improvements like the forecasters thought. So now that 10% well productivity growth rate that they're using in their forecast is wrong. The real growth rate is closer to half of that. And that's why they keep overestimating oil production. You can see the divergence between the EIA's estimates in blue and the real oil produced in yellow. Total oil production has actually been decreasing, and it's hit inventories hard. 2017 inventories have fallen very far compared to the average. Historically, when inventories get this low, and we're talking lower than Lil John here, oil prices have shot up to over $100 a barrel. So even though the data says we're close to a supply deficit in oil, the market still thinks we're swimming in it. Now, the second reason the market is wrong about oil is because they think electric cars are taking over. Sure, that seems like the case with all the crazy prototypes Elon Musk keeps showing off, but in reality, they're not. Bridgewater explained that electric cars will only displace 200,000 to 300,000 barrels of oil a day over the next 5 years. That's barely anything. And the number of electric cars sold worldwide will be tiny. These cars will still pretty much be a niche product for your stuck-up environmentalist neighbor named Greg. Compare this to the crazy growth in gas cars we'll see over the next decade. The Asian middle class, led by China and India, is going to explode. They'll need all the cars they can get, and they could care less about the environment. In a lot of those places, smog is the sixth food group. It's clear to see why the market is completely wrong about oil. First off, fracking improvements aren't adding to the oil supply like everyone thinks. Supply is actually tightening. And second, the growth in electric vehicles will barely make a dent in growing oil demand, especially in Asia. A big reason this oil bear thesis became so popular is because both fracking and Tesla are just great buzzwords. It's pretty easy to put together a story with two cool-sounding technological revolutions. Who doesn't love to say the word frack? Feels great. And Elon is always in the news with some cool new car, rocket ship, or Hollywood actress. But remember, just because a certain idea becomes popular doesn't mean it's reality. And when the market finally realizes how wrong it is about oil, we may see prices rise to $100 a barrel again. And you can see in the chart, this is already starting to happen. Crude oil has broken out of its long-term base and is now on the path higher. Now there's a number of ways you can play this trend. The simplest is to jump into the oil ETF USO. But my partners at MacroOps found a number of oil and gas stocks that should multiply much faster. I'll put a link in the description and comments to their free research that will go deeper into this oil thesis. Be sure to check it out. And if you want to learn more about being a contrarian and betting against the market like we're doing with oil, then check out our video where trading legend Stan Druckenmiller explains the importance of gaming alternative market scenarios. I'll put a link in the description and comments. And be sure to subscribe to this channel if you want to be alerted to money-making trends the rest of the market isn't seeing. Bye!